All right, welcome to Money Never Sleeps. It's President's Day, and this is a show where we talk about anything and everything that impacts the flow of money from around the corner to around the world. And even though the markets are closed, the money doesn't stop flowing. You have cryptocurrencies that are trading, you have real estate that's going on, you have things that are happening. Banks may be closed, but business is not closed. What I want to talk about today are SPACs. For those that aren't familiar with them, they are called special purpose acquisition companies. Basically, over the past couple of years, they've been coming into light more and more. It's not a new concept. Blank check companies have been around for decades. They've been utilized to do a number of things, and now the investment community is embracing it more. Last year, 2020, I believe somewhere in the vicinity of about $22 billion was raised in blank check companies and SPACs. Okay, over 50 SPACs, or maybe more than that, went public because basically what happens, you have an investor and a sponsor. They basically get together, and usually the investor has a good handle on the industry that they're focused on. So it can be anything. It can be technology, real estate, retail, whatever it may be, and they have a good handle on it. They put their money in, investors put their money in, and basically that money stays in an escrow account. They can't touch it. The only way you can touch it, that it can be accessible, is when you make an acquisition. Now, in theory, you're not supposed to know what you're going to acquire, because the moment you do that, basically you have to go through the entire IPO process for it, because you know what you're going to acquire. A blank check company, when it makes an acquisition, it becomes a reverse merger. And if you are familiar with reverse mergers, the good ones, the ones that are done right, they last and they grow. The over the counter bulletin board, or OTCQB, whatever they call it now, has been notorious for having reverse mergers done, and market makers and everything coming in, and pretty much the companies, they never get to where they need to get to. You have bad actors in there, and a lot of just funky things transpire. This is not what I'm talking about. SPACs are done by people that really, that are high end. They're top shelf in their industry, and basically, you have individuals that are getting into creating SPACs with other investors because they're really good at what they do. Again, it can be manufacturing. They can be the CEO of a company right now, and they're looking to do that. You have some hedge fund guys that do it, like Bill Ackman, and a bunch of other people that do it, and they do it for a reason. Two things. Make no mistake, they will make a ton of money from it, a ton of money from it, if they do it right. That's why it behooves them to do it right. They have a really good idea of what they are going to acquire. And well, let me just say, in the industry, they have an idea. And the benefits for them is that they have a little more time to do their due diligence and make sure that they're making the right decision, because when they do make the acquisition, and this does happen, basically they are entitled, I think it's about 20% of whatever the SPAC is. They keep that in their they that's theirs. That's their pay for doing the deal. Not a bad deal, not a bad situation. If it works out, you have people that can make billions from building companies, and that's a good thing. SPACs, you have a lot of them coming out, and this is what gets a little concerning. You have a lot of them coming out, and you have SPACs that are coming from here, sports stars, actors, so on and so forth, and they're looking for for the deal to put in there. Problem is, you don't have a lot of you don't have enough deals out there that can substantiate a $2 billion or $1 billion SPAC. Now, With that said, you also have other companies that, I mean, they're raising 10 or 20 million dollars in a SPAC. Okay, now is that something that a company would be interested in? I mean, I don't know, not so much a growth company unless they're looking, again, if they're looking to do a reverse merger and do that type of thing, then I get it. Again, I'm not a fan of these situations where they have a shell, blank check company shell, and that's been sitting there for some time, and they probably had something in there, and they spun it out, and basically they have a history there. I'm not a fan of that because you don't know what's going to creep up on you. That's why if you are gonna, if you're an owner of a company, if you're a founder of a high growth company, if you're going to look at the reverse merger or SPAC, as an exit, or as an, as an exit for you and your investors, and to help bring your company to the next level, I would not be looking at something that's trading on a lower market. If you have something of value, look at the SPACs that are out there. And the good thing about them is that they want to speak to people because they're looking for the next thing. If they can go and take a SPAC that they maybe raise a half a billion, $1 billion in, and basically take that and turn that over the next couple of years into two or three or four of a $5 billion or $10 billion company, everybody wins. Typically, when you're doing an IPO, the expenditures are ridiculous. On a SPAC, not so much for the company that's going to go into the SPAC. You're selling a piece of your company, a large, a nice chunk of your company, to the special purpose acquisition company. They're taking a nice chunk of your company, and you're getting, cash to go and continue to do what you're doing with your business. Not a bad deal. Not a bad deal. I think that you have, again, you have a lot of SPACs out there. I hear a lot of announcements constantly, like every week. Someone's doing it, and it's not so much the Bill Ackmans of the world. You have sports stars, you have just celebrities, people that really aren't in the finance business, and they're doing this because they think that they can go and make things work. And God bless them if they do it. God bless them if they do it. But at the end of the day, you have to go and understand what you're getting involved with. It's not rocket science, people. It's fairly simple. You have a company that's sitting on cash. They're sitting on cash. They're looking for the right deal. They get lined up with the right people. It's a win all around. You just have to know who you're getting involved with. And if they're decent people, you can make things happen. You can make some magic. And the thing about it with a SPAC, typically they have 2 years to do a deal. If not, this liquidation transpires. So the ones that were developed in 2020, they're looking for deals now furiously, rigorously, because they need to get them done. If not, the money goes back to the investors. Remember, that money has not been touched, and it can't be touched. It sits in an escrow account, cannot be touched. So, it's good to be informed on different investment vehicles that are out there. It's good to have an idea. Even if you're not involved with it, it's good to know. It's good to know, so you know what's going on in the world, in the financial industry. You have a lot of vehicles that are out there, and the special purpose acquisition companies, again, they're not new, been around for a while. They're good vehicles for what they are, and you're going to see a lot more companies going public this way. And I have to say that, Bumble, is a company that became a publicly traded company recently, and I commend them for what they did. Whitney, I mean, what she's done as an individual is amazing to me. If more people, young people, they're in their 20s and 30s, and they're out there and they're trying to change the world in their way, and doing it, the right way, yeah, you can make things happen. So kudos to them. Fantastic job. We're going to see a lot more, going on again in the IPO world, and the SPAC world. This year, a lot of things are going to happen, and I want to close out on the SPAC deal and talk about commercial real estate briefly. I mean, I hear it all the time. I've been involved in the commercial real estate industry for a while, and the bottom line is you hear brokers and agents, and they're saying, "Well, everything's going to spike, it's going to grow, it's going to blow up," and the bottom line is you cannot look at residential real estate and compare that to commercial. They're two different animals. Two different animals. Okay, retail. Okay, real estate will go and move. It can move pretty fast. Commercial real estate, not so much. It's because it's based on business. We're residential, and I didn't mean retail. Residential real estate. Residential real estate. Again, it's supply and demand. Look in New York, you have a lot of it's crazy how the rents have gone ridiculously high, pricing a lot of people out. When they gentrify areas and when they do that, and they take rents that were maybe 5 years ago were maybe $1,000, that today they're like two, three, $4,000 for the same place. You're pricing people out. The salaries are not going up in that fashion either. So. Again, I think that residential prices will come down. I think that commercial real estate is going to take some time to bounce back. There are going to be deals there to be had. The pandemic's not going to last forever, but people think that all of a sudden they're going to go back to normal. There's no normal. There's going to be a new type of morphed out, hybrid of what we're dealing with. You're going to have people working from home, people, partially working from the office and things of that nature. So don't think that you know what's going to happen, that things are going to get back to normal. There's no normal. What you knew is no more. Okay, is what is going to happen, because this pandemic is going to turn into an endemic. Is something that's not going to go away for a long time. With COVID and the virus, mutating into other things. Who knows? Who knows if even the vaccine is going to do what it's supposed to do? It may, but it may not. It may not be as great as people think. I don't know. I'm not a doctor, not a pharmacist, not any of that stuff. I just know that expect the unexpected. Okay, expect the unexpected. Get prepared for a new world where you have, remote and in office life. And that's the way it's going to be. And it's going to make the world a smaller place, and people are going to be able to work, be in the middle of the forest as long as they have internet connectivity and go to work. So and still go to the office if they have an office, but they want to stay in the forest. Let them stay in the forest. They can roll around and do things like that and go. But anyway, the bottom line is that there's going to be just a change up with things, and just be prepared for it. Okay, I wasn't going to do a show today, but I just wanted to do this because I thought, I think SPACs are really important for people to understand, because it's not the new thing. It's been around for a while. It's been around for a while. And if you're just hearing about it, then you are not in tune to what's going on. Just know you're going to have a lot of companies going public this year via IPO, via SPACs. No question about it. Okay. I speak to some of these guys. We have things on the table. And the bottom line is that there's a hunger for good companies that are disruptive in their industries and with good people behind them. All right. Anyway, that's it for this edition of Money Never Sleeps. Enjoy the rest of your day and enjoy the rest of President's Day if you're not working. Okay. And I'll be back with you soon with another episode of Money Never Sleeps. Thank you and enjoy.